Now please welcome moderator Moira Forbes, Executive Vice President, Forbes Media, and panelist Anu Duggal, Founder, Partner, Female Founders Fund, Ida Ikpudum, Partner, Gingerbread Capital, Heather Harnett, CEO and General Partner, Human Ventures, and Samantha Katz, Co-Founder and CEO, Left Tackle Capital.
Well, good afternoon, everyone. So excited to be here today and so excited to have this conversation building on so many important discussions this morning. And you heard a little bit in the video and throughout this morning, the challenge, obviously, in getting female founders funded. So today's panel, we're going to talk about how to change the landscape for female founders and really drill down on how to get more women in the investment seat, how to get more women in the funding space and in the decision-making roles to do that. We're going to talk about the patterns in the ecosystem, some of the barriers and the challenges, but also what are the things that are going to create the most accelerated change and opportunity to create the type of ecosystem that all of us are very eager to see. So Anu, I want to start with you because you were an entrepreneur who started a Female Founder Fund in 2014 at a time where actually, it's only 4 years ago, but it feels like so few people were talking about, these discussions. And again, it was only 4 years ago, so it's great that there has been this really change in terms of the tenor of the conversation. You just closed your second fund. You work with extraordinary entrepreneurs and extraordinary limited partners, including Melinda Gates and Katrina Lake. So I would love for you to take a step back and talk about the funding ecosystem and why new models such as yours are really starting to challenge the status quo and where you're seeing some ground being made.
Sure. So first of all, thank you so much for having me. And absolutely, to your point, 4 or 5 years ago, the concept of the need for a fund that focused on female founders, and even bigger than that, the recognition that you could actually get great returns by investing in female founders was a very novel concept. I think what you've seen in terms of ecosystem development since then is the rise of what we call the micro fund and a very different face of fund managers. So, traditionally you have Silicon Valley where, there's some very well-known traditional funds that I think have very much, been successful, and a lot of the big names that have been backed by them. I think what you're seeing is that there's an opportunity for smaller funds to invest in companies early, to start off with smaller amounts of capital, but to really be able to demonstrate great returns by getting in early. And a lot of these smaller funds are run by people, both from a gender perspective as well as from a race perspective, who don't necessarily look like these more traditional, call it like the old white boy club of Silicon Valley. And so I think that what we've seen, just going back to our fund, is that some of the founders we've worked with, even when they have the choice of working with more recognized names, are actually excited to be a part of a network where not only are they getting capital from a fund like ours, but also being able to tap into the shared knowledge of women who've already been through the experience that they're about to undertake. So I think that that's a big shift compared to where we were 4 or 5 years ago.
So these new models, not just in terms of investment focus, but in terms of the services and opportunities to be a true partner in doing that. Samantha, I want to turn to you. You are starting a new fund, Left Tackle, and you have good knowledge of the funding ecosystem. You've got a very, very interesting vantage point in the system, and obviously we know that more diverse managers and more diverse people in the driver's seat in terms of financial decisions tend to be able to then invest in the diverse founders. Why is it so important to you in the work that you're doing now to be able to create this type of new model? And how do we get more women such as yourself making these critical decisions from a fund perspective?
First of all, I'm so thankful to be here and actually humbled to be sitting on a panel with these 3 women who are part of my inspiration. I'm not the typical person that you would expect to see this kind of opportunity in the marketplace. But what I am is somebody that is a macro markets thinker. And I've taken a look back to see, why is the system the way it is today? Why has it become that 94% of the allocators in private capital in America are white men? 2.1% are women and 3.8% are people of color. And it turns out that it's actually rightfully so that we have 94% of the capital allocated by them up until now. It wasn't until 1988 that women were given the right to take out a commercial business loan in this country without having a man co-sign it. It's only been 30 years where we can access capital. And what have we done in 30 years? We've done a boatload. We have basically formed companies, we've formed funds, we've started to invest in funds, and honestly, it's time for a change. It's time to change the demographics and culture of finance, and when women and people of color come together to do that in a collaborative way, I think we can reset the system. So Left Tackle Capital is a new vehicle to reset the system. We're building the first accelerator, Y Combinator style model, to fund the funders, to give them the capital they need to launch, to give them the support they need to get through that hurdle. How do we move them from point A to point B? How do we get them the capital? How do we give them the human resources as well? And teach them how to be better investors, great operators, awesome at selecting the talent, branding their funds, and fundraising, the #1 reason why people don't leave an institution to raise a fund.
So, all of you are talking about these new models, right? Sort of ones that look very, very different than the traditional structures, where gender diversity is an aspect to that. Heather, you work at a hybrid of an early stage VC fund and a company builder. And so again, you're in this interesting juxtaposition of opportunity and relationship with founders, but you also feel really passionate about the fact that in order to change the ecosystem, we need to even peel back another layer further and look at who is funding the funders and looking at, for example, limited partners, right? Sort of the people who are investing in the funds that are investing in the entrepreneurs. Talk a little bit about that landscape and some of the drivers of potential change and why it's been somewhat of an opaque, or at least I think, area that has gotten less attention than some other aspects of this conversation.
Yeah, I mean, early stage venture is really fun and exciting because you get to be with founders and you get to hear their stories and you get to see these companies that are changing the world. So we oftentimes talk about the companies. But when you really go down to it, when you get down to it, venture capital is an asset class and you're investing other people's money to make a return. So when you're looking to make a return, you need to be able to find areas of opportunity that you quite frankly have arbitrage in. How do you arbitrage in something that's now become very sophisticated? And 25 years ago, early stage venture capital was the new young thing. And it was the thing that if you knew the founders who were building those companies, you were able to put money into and you were able to have outsized returns. Now the arbitrage opportunity is really talent. It's talent and it's in its industry focus. Now as tech is becoming very ubiquitous in every industry, you have to see where there are opportunities in those industries, and tech is not an industry in and of itself. It is across all different industries. This gives way for an unbelievable, unique opportunity for different types of founders to come into the ecosystem and start companies, whether it's media, fashion, beauty, finance. You're now able to have startups in these different industries, and you need different faces who are investing, who are founding, and who are on these teams. So I run Human Ventures. Human is the name and form here that we really do focus on the talent because we think that that's where there is a really unique opportunity to make outsized returns.
Well, I think, if you sort of talk about this, again, new faces, new dynamics, new opportunities for success. Ida, I want to talk about the work that you're doing at Gingerbread Capital. And for those of you who don't know the organization, it makes investments in women founders of high growth potential businesses, making investments both early and late stage. And what I found was really interesting that we just chatted about earlier is that you all both make direct investments in founders, but also as a limited partner. So funding some of the women on the stage as well. Talk a bit about how that model also is creating opportunities to have a more diverse ecosystem, and why that's giving you this unique moment to be able to not only seed women in this early stage, but also bridge the huge challenge for women founders to scale businesses at a meaningful rate and at the growth potential that so much of the traditional venture industry is looking at.
Yes, thanks so much, everyone. I think I probably have one of the best jobs because I get to both invest directly in female founders, but then also Linnea and I are investing in the fund. So we are proud investors in both Female Founders Fund as well as Human Ventures. And the beauty of that is twofold. It's that we are able to, by backing the funders, they're going out and seeing so many more deals than we have time to see, or that even might be in the range of the industries that we're focused on. But by them going out and making the bets on these seed stage companies, they're bubbling up, and then when these companies are coming to raise Series A or later, we are able to participate alongside those and add capital that could be very long dated. And our goal is to not just be in the round of the seed or the A, we're going to follow you into the B and the C, which is kind of where we see a lot of female founders, the funding dry up as well. So we're in it to be a very long-dated play, and we love that by backing both the funders as well as the founders, our goal is that we will be backing the future billionaire female entrepreneurs that'll be writing the checks, that'll start the ecosystem that builds out the larger play for everybody else. But I think that being able to play right at the beginning, as well as across the funding landscape, we need more women writing checks. We've got great women founding companies, and we need more women writing the checks that will back them as well.
So I want to touch a little bit about the fact that we need more women writing checks, and all of you are women who are writing checks, but the vast majority of the venture ecosystem does not look like you. So 75% of venture firms have 0 female decision makers. 9% of the venture funding decisions, only 9% are made by women. So how do we start to break that system as well? And Anu, I'll sort of ask you because, again, you're creating this new model. You've had some great success, high-profile success, both in terms of the investors and the companies that you invested in. But how do you think the work that you're doing is disrupting the status quo, or at least, it's one thing for sort of smaller micro funds to be doing this important work, but if the vast majority of the dollars are still locked up in this ecosystem that isn't moving fast enough, how do you think players such as yourself have the opportunity to change that other aspect of the landscape?
Sure. So, our point of view is that the biggest driver for change in this industry is going to be returns. And so as you see more and more women raising capital, having exits, Katrina Lake as an example, you have 2 IPOs this year that will be led by companies with a female CEO or a female founder. These are the events that I hope will cause the venture capital industry to really take pause and to say that, by kind of ignoring these opportunities or not taking them seriously or not truly thinking through the size of TAM, total market opportunity for some of these businesses, you're missing out on returns. And so I think that, as you see more and more of these companies in our own portfolio, we've seen over $600 million of capital raised by our Fund 1 portfolio. And so as you see these companies progress, as they go public, as they get acquired, there's going to be more money in the ecosystem, but there's also going to be a realization that, unless you're able to attract and to pay attention to the fact that women are building large venture-backable businesses, you're going to miss out. And so, I think some good work has been done over the past 18 months in terms of in fact, most of the largest funds have brought on 1, if not 2 female partners. And I think that that's important. And I think that's going to attract a different type of deal flow and hopefully lead to, again, big exits. But I think the returns for us is where we really see the needle moving.
It's a competitive industry, right?
Yeah.
I mean, if people see that money and opportunity is being lost, dollars will eventually follow as well. So sometimes it takes that, the commercial capitalist aspect, to be able to change the market as well. Samantha, how do you see that when you're in the very, very early stages of your organization? How do you think about the role that you're playing in terms of impacting and influencing the larger ecosystem and inspiring, or at least compelling other women to be writing checks and funding?
So in a couple of ways, actually, and there are some interesting points just on the panel that I want to pull out for a second in regards to arbitrage and talent and confidence and curating that kind of ecosystem. I think we don't talk about it at all, and having been a person who spent 16 years in Wall Street building things from scratch, it wasn't until I stepped out that I realized how I did things within adapting to the culture of the institution. And I don't think we talk about this enough in terms of investing. When you invest, you're supposed to invest in who you know, who you trust, your community. And when you go inside an institution, you adapt and invest along the culture of the institution. So how do you get people to pull themselves out of the institution? So to your point, Moira, on how the numbers are increasing in terms of female partnerships in these firms, it's great, but we have to ask ourselves the question, are they bringing to the table their full selves, their culture? Are they bringing the deal flow forward that represents who and what they know? And our hypothesis is that they don't. And to the point on arbitrage, Heather, 1,821 businesses a day on average are being founded in America by women right now. The fastest growing subset of those is women of color, and when you look at African American women in particular, only 34 in the last decade have raised more than $1 million in capital. It is the biggest arbitrage opportunity of our lifetime, and the reason why you see 4 women sitting on this panel to talk about it is because when we see opportunity, we hustle and we do something about it.
I love that. It just, again, it speaks to this opportunity and momentum, and it's there for the taking in terms of both the opportunity to just found some great businesses, but also to make great returns as well. Heather, with the new model, and again, as I said earlier, we're seeing this experimentation in venture capital. There is this, new dynamic of it. Used to be that you write a check and you get a board seat, and the relationship was not done, but it was not that deep. And now, there's this entire ecosystem and opportunity of resources and services that firms are offering their founders to be able to power their growth. How do you think that this will impact the funding landscape and the relationship for women to be able to build and scale their businesses? And are there different things that they're looking for, or ways that you can support them as a funder that will move the needle?
Yes. So we looked at the landscape of venture capital in a macro level and said, early stage funds are raising larger and larger funds, the ones that have been around for a long time. So the check sizes are larger. It means that they require more proof points in order to write that seed check. I'm sure there are a lot of entrepreneurs in the audience right now. How many times have you gone to a fund and they said, come back when you have a little bit more, it's a little too early for us, but we'll keep an eye on you. That was happening so much, especially in New York City, with male and female founders, but founders who had different kind of perspectives that weren't the traditional Silicon Valley perspective. And so we saw that gap in the market that said, let's go really early. Let's go pre-concept. Let's bring founders in before they even have their concept of the company, but they have their domain expertise. Let's let them know what their strengths are and help them build out that team. And then we accelerate that process, and we incubate the company, and we're the first check in. So the ecosystem just lent itself to, if you can go early, you can actually co-build with founders as well. And I think as the company building process becomes more sophisticated, you have to know that you have an edge in that marketplace. It's so much harder to get funding because, rightly so, because you know now the trends and the indicators that this growth company is going to be, in fact, that. And it's harder than ever, I think, to grow a business, but it's also easier than ever to have the resources to be able to do it. So if there really is an opportunity that you're seizing and then you're the right person to be founding that company, you will see that, and you'll see the indicators and you'll see the trends, and now there's a plethora of information out there. And I just saw that in the venture capital space, starting very early, and then, as Ita mentioned, being able to fund the founders throughout those different life cycles is a really important part of being a significant player in the ecosystem. Not a one-off fund, but an entire franchise that can continue to go and be the next Andreessen Horowitz, be the next First Round Capital, and some of these that we know who have done quite well.
So building on that concept of pre-concept businesses or really, really early stages, Ida, you worked at Plum Alley overseeing its investment pipeline, which allowed the membership-based organization for individuals to invest, family offices to invest, institutions to invest, but to do so in a very easy, seamless way, to allow people to write a check and to be able to fund the entrepreneurial ecosystem who may not necessarily have the expertise or the experience or be that first step, and hopefully with the goal of them being more engaged within this funding landscape. How do you think this dynamic will change in terms of the types of people who are writing checks and the relationships that they're having either in the traditional venture funding landscape or similar to your previous work, new models to be able to write a check may not be a huge one, but at least to start to engage and fuel opportunity?
Well, I mean, I think at the core of it, it's that, representation matters. Representation matters when you're seeing who's funding companies. Representation matters when you see who's writing checks. When I started my career at Goldman Sachs. We had 5 women on the trading desk, and I was the only black woman on the trading desk, and it was the most on Wall Street at that point. I'm not even sure if there's that many right now. But it was starting to see that happen. But one of the things that I noticed even back then was that the guys in my analyst or associate class, they started making investments in private companies when we were in our 20s. I know women that are now managing directors or partners that even though they have disposable assets, have not been writing those checks. And the thing that we want to talk about of wealth creation is that the ability to have money is the ability to give you the opportunities to choose what you then want to do. You don't want to be stuck in the same place because you have to be tied to a paycheck. So I'd say to everybody in the audience, think about where you want to be 5, 10, 20 years from now, and it might not be that you're sitting in a VC, but you can start doing a vehicle that will help you start putting some money aside to then give yourself that opportunity to choose where you want to be in the next 10 years from now. And so whether it's a vehicle like a Plum Alley where you can join and do syndicates and be able to write a small $10,000, $5,000 check into something that's pooled together that makes a bigger play, or you want to go and work directly in the venture world as a VC and be part of that capital base that's writing more like $500,000 to $1 million plus types of checks. You have the ability from right now in your seats to start putting yourself in that position to write the checks that will change the landscape. We vote with our dollars. You can vote with the investments that you want to see of the companies you want to see in the world and the kind of businesses that are out there.
And I think you make a great point that I think we underappreciate the opportunities that we have ourselves, even in small ways, to be able to contribute.
It can start now.
Can I comment on that too, just quickly? The other point to starting to make angel investments is it begins to build your own personal track record for if you are interested in becoming a venture capitalist or you want to go into venture, you have to start building that track record. And it's one of the things that's prohibited women from starting their own funds as well because they didn't start earlier on in the track record. So I just wanted to add that.
On that point too, when do you identify as an investor? When? Most people identify as investors the day they've sold their first company and they come back and say, I'm going to become an investor now. When should you become an investor? The day you got your first paycheck.
That's a great point. And I think it totally shifts people's perception in terms of the landscape, the experiences that they can't have, and also just personally on the financial side, helping women close the investment gap for their own finances, because you can have some meaningful returns and opportunities financially as well to grow. As we wrap up, I'll ask a speed question of each of you. I was talking to an entrepreneur earlier today who was having some frustrations raising, I would say, in more of the traditional venture environment, all of you represent these new models, hybrid models, different ways of approaching the ecosystem. Given the work that you're doing on the other side of the table and the women that you're seeing come through your doors, what's one piece of advice you would give the entrepreneurs in the room about how to think differently or what to do differently in terms of raising capital outside of the traditional ecosystem?
Sure. So my piece of advice would be, especially at the early stage, if you can leverage your friends and family network, your college network, to raise some capital that enables you to get your product to market, that's incredibly helpful because it allows VCs and investors of that category to really understand your vision and to invest not just in you, but also in the company, the product, the service, whatever you're trying to build.
Yeah.
I would say talk about your idea. You never know who is sitting next to you, who's like brothers, sisters, best friends, they could be a major investor. Talk about your idea and don't worry so much like somebody's gonna steal it or no, there's very few original ideas. It's actually who goes out and executes it and it shows the differentiation in what's out there. So talk about what you're doing and say, and I always like to say, have 3 things that you've done very well. Women are not great at doing the not so humble brag. Be able to talk about 3 milestones of what you've done with your business or the vision that you have, and then have up to 3, I think people hold 3s in their mind well, of asks. Of if you had somebody in front of you, what would be up to 3 things that you may want help with or an ask for? So 3 key milestones and 3 key asks.
Nothing raises capital better than proof of concept. So I'd say once you know you have something that's truly venture backable and you have a business that you really believe in, spend the time to do your research to find the investment partners who are aligned with you in terms of value and sector and focus and excitement. There's a plethora of information out there now. Every venture capitalist has their thought pieces and they just talk about everything that they want to see in the world. So if you find somebody who's truly aligned with what your business is doing, then they're pretty accessible. It's also a great industry because everybody's pretty accessible. So research.
All of the above. And really, community, not everybody has friends and family. And I think you have to be fearless. Just walk up to strangers and tell them what you're doing. Ask for help. Vulnerability will get you so far.
I think that's all great advice and fantastic insights just in terms of the ecosystem as a whole. But what are things that everyone can do today, right now, this afternoon, to be able to move the needle forward either on their own businesses or to be part of the funding landscape themselves? So ladies, thank you so much for your insights. Very much appreciated.
Thank you.